Coming up on Business Incorporated. Egypt's internal trade sector contributes 21% to GDP in 2020-2021 financial year. And Nairobi set to get gold refinery investment. And Somalia launches trade information portal. Hello, welcome to the program. I'm Ladi Williams. Let's get started with markets now. Trading started on a mixed note on the African continent. Nigeria's NGX was positive, up 0.11%, while South Africa's GSE lost 0.29%. Egypt added to close 1% at intraday, while Kenya closed Friday's session negative at 0.11%. And in the Middle East, it was more positive. Abu Dhabi led the gains up 0.43%, while Dubai's market lost marginally, 0.05%. Another region, Saudi Arabia added 0.14%, while Qatar was up 0.23%. And over to Europe now. European stocks traded slightly high on Monday, reflecting a positive trade in Asia-Pacific markets overnight. Let's bring in Astos Pandey now in Frankfurt. Hello, Astos. Great to have you. Well, Hurricane Ida has brought oil production on the U.S. Gulf Coast to a virtual standstill. What does this shutdown mean for energy production in the U.S.?
Well, it's too early to actually tell the full impact of the hurricane, but oil prices are trading down in the red. They're down 1%, the U.S. oil prices, which means that the oil markets are really not that worried about the hurricane. Or it means that they know that it hasn't had a serious impact as far as the oil infrastructure in the Gulf of Mexico is concerned. So that's the reason why the oil prices there are lower, and they're more worried about what's going to happen at the OPEC Plus meeting. But now the focus is actually on the refineries there. Remember, that area is a hub of refining as far as the U.S. is concerned. And gasoline prices did go up more than 3% at one point, which means that there are some concerns as far as the refineries in the region are concerned. And potentially the prices of gasoline could go even higher. That depends on the kind of damage that the hurricane causes to the infrastructure there, and if it takes longer for the refineries to come back with production, then it's really the gasoline prices could go higher from here.
All right, let's shift gears now. In his much anticipated Jackson Hole speech, U.S. Federal Reserve Chairman Jerome Powell has said that the central bank could scale back stimulus gradually this year. How is this tapering talk going down with investors in Frankfurt?
Well, investors feel that Chairman Powell was bang on as far as his messaging was concerned. He got it right, and he stated clearly that he is going to, he could slow down bond purchases, but at the same time, there was no rush to increase the interest rates. So that's the kind of messaging that the markets was actually hoping to hear from Chairman Powell, and DAX was up and still up here, trading in positive. So basically the taper tantrum that everybody was fearing, that did not materialize because the message was so to the point. Market participants do believe that perhaps the Fed is trying to take a very balanced view where growth is tolerated enough that it creates jobs. There are still millions of Americans who are out of jobs. So we need that much growth to create those jobs. But when that growth becomes leads to overheating, and when it leads to runaway inflation, that's when the Fed could intervene, and that's the kind of message that the markets got.
All right, so it's a fresh new week. What else are investors looking forward to this week?
Well, there's a host of data to digest this week, inflation, job numbers here in Germany. But the crucial ones would be the PMI data from the manufacturing sector that comes out Wednesday. The market participants would be eager to understand how the supply chain bottlenecks are now affecting the industry, the manufacturing sector. Remember, the manufacturing sector has been a laggard of sorts as far as the total recovery in the single currency bloc is concerned, especially here in Germany. Supply chain bottlenecks have been pulling down the overall recovery. So it would be interesting to know what the purchasing managers think. Then there's the OPEC Plus meeting. There are no surprises awaited there, but despite the rise in Delta variant cases, the oil group members are likely to stick with the 400,000 barrels of oil per day of production increase per month. That's what they've been following since August, so they're likely to stick on with that. And then on Friday is the all-important jobs data from the US, and that's again another jobs data that the markets would be really looking forward to, because we've had a bumper number in July, and again, if you have 2 months of, say, bumper number on the job front, then that would just make it easier for the Fed to go ahead with its tapering plans.
All right, Ashish, we'll be tracking all that data. Thank you so much, Ashish.
Thank you.
All right, over to the UK now. We have Juliana now with updates from London. Great to have you, Juliana. Well, NatWest forced to pay up to £500 compensation to customers over account closures. What's the story here?
Good afternoon, Laddie. Yeah, really interesting story. Pretty difficult to get to the crux of the matter, but the Financial Ombudsman Service, which is the body that looks after any discrepancies between customers and financial bodies in the UK, have awarded a string of customers compensation of up to £500 each. And this is because thousands of customers had their accounts closed with NatWest over the past couple of weeks now, because of COVID-19 and the billions of pounds that has been given out to so many individuals around the country. Financial fraud has surged in the UK over the past couple of months, and now we don't know if each and every single customer that has given compensation by the Ombudsman is guilty of fraud, but that's the reason why NatWest have closed their accounts. So the Ombudsman was very clear in saying that legally NatWest were able to close the accounts, but the issue is customer service, poor customer service. One customer, for example, who had an overdraft of about £5,000 abruptly had their account closed, and rather than setting up a payment plan, they were asked to make a payment within 30 days. There was another customer that said they didn't have any access to their money and had to resort to going to a food bank for food for their family. So the money's been awarded. We're not sure yet whether or not this is a massive a mistake, an error that has been caused, and these innocent customers have had their accounts closed, but I suppose we'll find that out in due course.
Right, we'll keep watching that. Let's look at some retail story now. Billionaire brothers behind Asda's £6.8 billion takeover are reportedly planning to open more than 300 convenience stores across their petrol station estate. That's quite a big move.
It is a big move, and I think a lot of observers or commentators were surprised that the Easter Brothers, or Asda, because of course it was owned by Walmart just a few months ago, are so far behind their competitors when it comes to doing this. I think in the UK, convenience stores and budget stores are very, very popular. You only have to kind of walk 1 or 2 minutes down where you live. You've got a small grocer at the bottom of your street. So lots of our viewers in the UK will be familiar with seeing Tesco convenience stores, Waitrose even. But the Easter Brothers are very keen to get into this market. They do own EG Courts, which is a series of petrol stations across the UK. In fact, that was one of the reasons why this deal wasn't going to go ahead, because the Competition and Markets Authority felt it was too much of a lack of competition in the market. but they are going to be using 300 of these petrol station forecourts to open Asda convenience stores. I believe it's called Asda On The Go. They've trialled it already in 5 places dotted around the country. It's been doing this successfully. Of course it would, because it's a growing market, so they've decided to up the game and do it in 300 stores. So, yeah, a great move for the Issa brothers, another splash for them.
Well, exactly. Well, markets are closed today. What do you think will drive investor sentiment this week?
Yeah, it's a bank holiday. Markets are closed. It's a pretty quiet corporate week, actually. But I suppose the big one, really, as you were even discussing with Ashutosh, there is a PMI, a final PMI data is in. So we're going to have a really good look at the private sector and how it's been doing here in the UK. It's not been doing so great, actually. We had flash composite data for manufacturing, construction, services. It does show once again that growth is slowing. So we are still getting growth. We are still seeing that we are recovering out of the post-pandemic losses. But it's not as fast as it was. You know, the Delta variant, need I say, is still lingering. A lot of people not so comfortable going out. People are keeping their money in the back pocket. We know that the furlough scheme is coming to an end, gosh, in a couple of days. What is going to happen to the labour market? I think consumers are a little hesitant because they do want to make sure that they've still got their jobs by the end of the year. So, yes, not much to talk about, but I know you guys are still going to keep me busy.
Yeah. All right, Julia, thank you so much. Enjoy the bank holiday.
Thanks, Levin.
All right, shares in Asia Pacific mostly rose in trade with Australian stocks recovering from an earlier slip as COVID cases in the country spiked. Japan, the Nikkei 225 advanced 0.54% to close at 27,789.29 points, while the Topix index gained 1.11% to 1,950 points. South Korea's Kospi ended the trading day up 0.33% at 3,144.19 points. Mainland Chinese stocks were mixed on the day as the Shanghai Composite rose 0.17% to 3,528.15 points, while the Shenzhen Component dipped fractionally to 14,423 points. Hong Kong Taxing Index closed 0.52% higher at 25,539 points. The S&P ASX 200 in Australia closed 0.22% higher at 7,504.50 points. MSCI's broadest index of Asia Pacific shares outside Japan rose 0.91%. Elsewhere, U.S. Federal Reserve Chairman Jerome Powell indicated Friday that the central bank is likely to begin tapering before the end of the year, though there's still much ground to cover before rate hike. And U.S. stock futures were steady in early trading as investors readied for the final trading days of August. Dow futures rose just 10 points. S&P 500 futures were little changed as NASDAQ 100 futures traded above the flat line. Stocks could stay range-bound until the release of August jobs report on Friday. The S&P 500 is up 2.6% in August. The Dow Jones Industrial Average and the NASDAQ Composite rose 1.5% and 3.1% this month, respectively. With the Fed's Jackson Hole meeting in the rear view, investors are now focused on the direction of stocks for the final month of the year. The S&P 500 is up more than 20% in 2021. But the market is also absorbing peak policy stimulus, peak earnings acceleration, and peak reopening momentum. And oil prices paired early gains today off more than 3-week highs reached early in the session as a powerful hurricane plowing through the Gulf of Mexico forced shutdowns and evacuations of hundreds of offshore oil platforms. Brent was up 16 cents at $72.86 a barrel. It rose more than 11% last week in anticipation of disruptions to oil production from Ida. U.S. oil turned negative and was down by 4 cents at $68.70 a barrel, having jumped a little over 10% over last week. Benchmarks hit highs not seen since early August, about $73.69 a barrel and $69.64 respectively. Earlier in the session, as Ida slammed ashore near Port Fortune, Louisiana, a hub of the Gulf's offshore energy industry. Yesterday, energy companies had halted more than 95% of crude production or 1.74 million barrels a day's worth in the U.S. Gulf of Mexico, is either headed toward drilling rigs and other infrastructure. And gold prices scaled today to their highest in more than 3 weeks after U.S. Federal Reserve Chair Jerome Powell stopped short of providing any clear guidance on the timeline for pairing economic supports in the Jackson Hole Economic Conference. Spot gold was up 0.2% at $1,819 per ounce earlier in the session. Bullion hit a peak since August 4th at $1,820, while U.S. gold futures were up 0.2% at $1,823. Data on Friday showed U.S. consumer spending slowed in July, while fears about the COVID-19 Delta variant knocked consumer sentiment to a more than 9.5-year low in August. Physical gold demand in India was subdued last week as jewelers held off purchases, hoping for a dip in prices. But for top consumer, China saw a slight uptick in activity. Silver rose 0.3% to $24.07 per ounce, while platinum climbed 0.7% to $1,015. Palladium was 0.5% higher at $2,430. And after the break, we'll look at stories on the African continent. That's in a moment. Do stay with us. And in Egypt, the internal trade sector contributed 21% of GDP in the fiscal year 2020-2021 with a value of 1.4 trillion Egyptian pounds. Internal trade sector is the largest economic sector and includes wholesale, half wholesale and retail trade supply chains, storage spaces, logistic areas, and other activities that serve to supporting the trade system in Egypt. The strategic sector employs nearly 10 million people, representing a third of the workforce in Egypt, and is the second fastest sector in terms of growth rates during the past 4 years. This project serves as a large population density in the governorates of the Delta, amounting to 12 million people. Similar commercial logistic projects are being implemented in other governorates, amounting to 11 governorates, with a total of more than 18 projects at an investment cost of 50 billion Egyptian pounds. And Zambian firm Alinani Precious Metals has announced plans to build a gold processing plant on Mombasa Road in Nairobi at a cost of about 1 billion shillings, targeting artisanal miners. The gold refinery project, whose construction starts early September, will offer miners the means to extract value from their own mineral wealth rather than just exporting raw commodities. This plant will have the ability to produce exporting and also export raw commodities. And small scale or artisanal mining is popular in Siaya, Migori, Kisumu, and Kakamega and Homa Bay counties. And the APM refinery plant will target the processing metal produced by informal diggers in several counties in Kenya. And Somalia's Ministry of Commerce and Industry, supported by the IFC, launched a trade information portal to lower cost and simplify trade procedures for Somali importers and exporters to facilitate cross-border trade and provide more transparent trade information for businesses. The portal provides a single source for all cross-border trade information. Over 90 laws, regulations, procedures, and other trade-related measures from over a dozen government agencies can now be accessed online. Business can also access licenses, permits, and applicable fees. The portal will provide Somalia's business community with easy access to information on import and export regulations and procedures. Also, it aims to improve the predictability and transparency of Somalia's business environment and provide foreign and domestic investors with quick and timely access to trade rules and regulations. And now we'll be looking at Zimbabwe's trade data for the first half of 2021, recently released by the Zimbabwe National Statistics Agency. Exports grew 21% in the first 6 months of 2021 compared to the same period last year. We'll be discussing this with this latest data about its impact on Zimbabwe's economy with persistent Gwanyanya, economist and member of MPC Zimbabwe. Great to have you on the program.
Thank you for having me on the program.
All right, so the Zimbabwe National Statistics Agency has recently published external trade statistics for the first half of 2021. What do you make of all this data?
You would find out that there's been a significant improvement on the exports over the period under review. The country continues to perform very well and towards the target of 5 billion plus export performance by year end. You will find out that there's been an increase in the exports driven by both value and volume increases. And the imports, on the other hand, have increased, but we continue to be in a healthy trade balance position. Over the last 2 years, Zimbabwe has been recording trade surplus. In 2019, we recorded a surplus of 0.9 billion, which increased to 1.1 billion the previous year. This year, we expect a trade surplus of around 611 million. So
okay.
This is a significant improvement on trade performance from the previous years when our trade deficit was averaging above 2 billion.
Okay.
The improvement in trade, in the trade position or the trade balance of the country is very important at a time where we're trying to strengthen our currency. And to marry that trade performance is the performance on the domestic economy. Over the same 6 months you're talking about, the country also managed to generate a surplus of 517 million Zimbabwean dollars. So we have got two surpluses which will support current stability in Zimbabwe.
All right. So let's look at some of the imports now. In January 2020, Zimbabwe spent over $100 million on fuel imports, and this dropped as low as $30 million in August 2020. What drove this decline?
In 2020, on the 23rd of June 2020, the government introduced a foreign currency auction system, which was essentially a price discovery mechanism. Before that system, we did not have an efficient foreign currency allocation mechanism, because the rate then was to a greater extent fixed. So there was inefficient allocation of foreign currency, which was taken care of by the foreign currency auction system. Now, from the foreign currency auction system and the benefits thereof, we have seen a rationalization of demand, and specifically for fuel, which is a major foreign currency consumer for the country. Because of the dual currency system, the fuel subsector was given an opportunity to also procure foreign currency from the market through liberalization of that sector. So it is essentially the liberalization of the fuel subsector that has resulted in a significant decrease in the demand for foreign currency related to fuel importation.
Yeah.
So the fuel subsector is now selling the product largely in foreign currency and therefore accumulating the foreign currency for importation of the product.
All right.
And where...
All right, Mr. Gwanyanya, well, thank you so much for coming on the program. We will keep tracking the Zimbabwean economy to see how it progresses this year. Persistence Gwanyanya is an economist and member of MPC in Zimbabwe. Thank you so much for coming on the program.
Thank you for having me on the program.
Thank you. All right, moving on now to East Africa, where consumers are enjoying a reprieve with the price of maize flour dropping below 100 Kenyan shillings for a 2-kilo packet on retail shelves. The lower prices are a result of falling maize costs, accounting for 80% of the total charges involved in flour milling. A 90-kilo bag of maize is now going for 2,600 Kenyan shillings from a high of 2,900 Kenyan shillings last month, as supply of the commodity in the market improves following the onset of harvesting of the short rain crop in the South Rift. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.